Today is Friday, March the 6th, and what a tumultuous week it was. Look at the volume, right back to being high. Buying volume we've seen this week has been lower than selling volume. We had a nice little bounce towards the end of the day. That doesn't mean anything. That could be just short sellers closing their positions. Just a sea of red. Healthcare picked up today. Healthcare, maybe it's the coronavirus starting to set in, but healthcare picked up. Advancers and decliners were about 4-1. The stock market, the breadth, the oscillator took another dip down, but it's not as low as the prior low. The volume was about a little over 2-1 declining volume. But now let's look for what signs are we looking for in the McClellan oscillator to show that we might turn around. And I don't think we're going to turn around anytime soon. Look at 2009 when we started to turn around and the market recovered, and this data isn't plotted here, but it just continued to move up. We saw these lows being higher, so it showed that the bulls were in charge and the bears were no longer able to pull money out of the market, which is just what we saw happening now, but the opposite, where we saw the bears taking charge, and anytime money went into the market, the bears took it out of the market. So we had lower highs, and then finally we had this huge precipitous drop. So for a turnaround, we're going to look for a series of days. This was 4 or 5 lows over a period of what looks like about 2 weeks. So we're far from that, in my opinion, because look how long it took 2 years of this financial mess to get to the bottom. Now, the coronavirus is not the financial situation. It shouldn't take as long to turn around. If it's going to turn around, it's either going to get very bad or it's going to turn around. But we're going to look for the bulls to take charge using the McClellan oscillator. Let's look at the charts. The VIX hardly moved today. It did have a big spike, but it pulled back primarily in the afternoon, I'm sure. Let's look at the 15-minute, and we'll see that the VIX did pull back in the last 60 minutes, the last hour of trading. So the SPX down. This is our 50-minute chart. Let's look at the one-day chart. Finished at the top end, but let's look at the weekly chart, which we started to do at the beginning of this week. And we can see that we got support on the cloud at the beginning of the week, and we've stayed above that, but below the 200 daily. It's a weekly chart, but it's a daily moving average that I've plotted here. And the Chiku span lost both 200s. We're certainly not out of the woods yet. There will be occasional bounces, maybe Monday, maybe not. Let's see what happens with the coronavirus over the weekend. Apple down $6. The cloud almost had a chance to act as resistance. We did lose the 50. At one point, the 50 was acting as support for the Chiku span, and we lost it. Volume was not bad. So down 605, but we could have been much worse. We were down to 281 at one point during the day, and we closed at 286. Caterpillar only down 56 cents, managed to recover a lot of its initial loss. We drew this green line a few days ago, and we put an alert in here because, get rid of this, because it looked like that could be, let's get rid of the Ichimoku. It looked like a place where we might be able to get support, where we'd seen support and resistance several times before. And we did hit that, and we had a bounce. Let's get rid of the Bollinger Bands. Let's put in a Fibonacci here, which will go from this high to this low, and let's see what kind of a retrace we've had. Didn't quite, these two got to 50%. This one didn't, which means that Caterpillar could go down to 114 or 115. So keep an eye on that. Let's get rid of this line, and now we're looking for 114, 115 for Caterpillar because the pain isn't over yet. I'm going to skip right to AT&T down below 37. We're going to have an opportunity to buy this again, and we're going to look at the 200 as being support. And if it can hold the 200, it bounced off the 200, but let's keep an eye on it because I do want to finish my position in AT&T. I've only got less than half a position. I got about a third of a position, and I want to add to that. But there's a good chance that we come back and test the cloud again like we did last week. Whirlpool, I added 50 shares today because its bottom is probably, it could very well be around 100, but I think that the bottom is more likely. We've got a couple of Fibonacci's here. We have Fibonacci's from this big move, and we have a Fibonacci from this small minor move here. And let's see, on this small minor move, we didn't quite get to 78.6, but on the big move, we did get to 50%. So we pulled back. Let's get rid of the Chiku span here, or the Ichimoku. Let's get rid of the Bollinger Bands. And on this big move, when we went from its 2010 low at $20 all the way up to $216 in February of 2015, we had a pullback to this level, which was almost 61.8%, and we had this run up. Now this run has had a pullback back to the 50% of the big move. So that's why I bought a few. I think we're still going to have an opportunity to add to Whirlpool at lower prices. So let's set an alarm at this 50% and keep an eye on that for an opportunity to buy at a lower price. If it comes down to the 50 and bounces, it's an opportunity to add another 50 or 100 shares. So where are we going next week? The market is not confident that the coronavirus isn't going to severely impact the U.S. economy, and we don't know how long that would be for. Italy, schools and universities are closing. We just saw an hour ago that some cruise ship off the coast of California, 21 people tested positive for the coronavirus. So we're going to play between the cloud and the 200 daily moving average for most of next week. So I'm going to take this and I'm going to put this in here and say that next week this could be our range. We could be in this range here. So I'm just going to have that visible in the 1 week only. So let's watch for that.